Hey, what's up everybody? Welcome to the Crypto Sandwich channel, where we talk about all things crypto, and I'm a ham sandwich. It's the first episode, and I'm excited to get started. Today we'll be covering news and technical analysis in the crypto industry and traditional markets that affect the crypto space. A free way to support the channel is by liking the video, commenting down below, and subscribing to the channel. Today is Tuesday, February 22nd, 2022. We have a lot to cover, so let's get into it. In this week or so in crypto, here's what's been happening. The world is crazy, Bitcoin fundamentals are bullish, and price is not. There's lots of news to cover, let's get into some tabs. First up, making sense of India's new crypto rules. In an almost endless series of flips and flops on their stance, India's first concrete steps in acknowledging crypto may be here to stay, having spurred both excitement and confusion over whether the country is approving crypto as an asset. First, the government intends to levy a 30% tax on any income generated from crypto transactions, and a second tax of 1% at source on all transactions. Second, India intends to introduce a digital rupee in the form of a central bank digital currency, or CBDC, within the year. The single biggest point of confusion for users as a result of the announcements is how crypto could be taxed and yet not be legal. And in classic government ambiguity, they have refrained from suggesting crypto was legal. Next up, on the heels of India, to see who dominates the beach in their summer footwear, flipping and flopping on their crypto regulation stance, the Russian government introduces crypto bill to parliament over central bank objections. The Ministry of Finance is pushing forward with cryptocurrency regulation in Russia. Crypto payments will still be prohibited. Russia's Ministry of Finance is pushing forward with its plan to regulate cryptocurrencies in the country, and has introduced a bill to Parliament, according to a press release published on Monday. The bill was presented February 18th and is based on the previously approved roadmap drafted by several government bodies, including key law enforcement agencies. Just like that previous India story, this is good news. With regulation comes adoption. Next up, U.S. President Joe Biden is reportedly expected to issue an executive order on cryptocurrency this week. It will direct a wide range of government agencies to come up with a government-wide strategy to regulate crypto assets. Nothing says democracy like an executive order. I'm sure the outcome of this will affect the prices and probably not the way we want. Next up, an ongoing dispute is developing between the Canadian government and a small fringe minority of citizens. The government has declared a state of emergency and granted themselves never-seen-before emergency powers to surveil and unbank citizens and political opposition to the mandates imposed over the last 2 years. Vitalik Buterin calls Canada's use of banks to stifle protesters dangerous. Decentralized systems are not about lawlessness, but rather a return to rule of law, the Ethereum founder said in an interview at ETH Denver. The Canadian government's effort to choke off the flow of funds to protesting truckers in Canada illustrate why cryptocurrencies exist, Ethereum founder Vitalik Buterin said in an interview Friday at the ETH Denver conference. Buterin, who grew up in Canada, did not condone the freedom convoys. If the government is not willing to follow the laws and give people a chance to defend themselves, and they just want to talk to the banks and basically cut out people's financial livelihoods without due process, that is an example of the sort of thing that decentralized technology is there to make more difficult, Buterin said. This is a pretty crazy story to watch as it's unfolding, and it's basically an ad for crypto as people around the world condemn the use of force and lack of due process. We'll see what happens next. Next up, Bulgarian Stock Exchange launches 8 crypto ETNs. Bulgarians can now invest in crypto assets through their country's stock market. The Bulgarian Stock Exchange has recently launched 8 ETNs based on 2 digital currencies, Bitcoin and Ethereum, following the example set by leading European platforms that support such products. This is just one of so many examples lately of bullish adoption. Getting stoked. Next up, BlackRock has entered the chat. Why the $10 trillion asset manager's arrival would be a big deal for crypto. BlackRock may be planning to offer crypto trading to its clients through Aladdin, the $10 trillion asset manager's integrated investment management platform. Insane. Everybody is getting on board. Next up, KPMG Canada, one of the big 4 accounting organizations, announced earlier this month that they added cryptocurrencies, including Bitcoin and Ethereum, to their corporate balance sheet. Bullish. Moving on. Warren Buffett nibbles on a bit of rat poison squared and invests $1 billion in Bitcoin-friendly neobank and dumps Visa and MasterCard stocks. The Oracle of Omaha now has more companies in his portfolio that have direct and indirect exposure to Bitcoin and similar cryptocurrencies. Buffett, the so-called Oracle of Omaha, is popular for his cautious approach to investing, particularly in the market's hottest sectors such as fintech. The veteran investor had also downplayed emerging decentralized finance solutions like Bitcoin, ridiculing it as an asset that does not create anything. Just my opinion. I think besides Warren's right-hand man, Charlie, this is the last domino to fall of the traditional finance world titans coming around to Bitcoin or indirectly investing in the industry. Bullish. Next up, Mexico's third richest billionaire says buy Bitcoin. Forget about selling. You'll thank me later. The third richest billionaire in Mexico, Ricardo Salinas Pliego, advises to buy Bitcoin. Keep buying while the price is still low and hold the crypto without thinking of selling. Trust me, you're going to thank me later, he affirmed. That is one bullish billionaire. Moving on. Next up, this one's a couple weeks old, but I just had to throw it in there because it's so bullish and it just exemplifies the price shock that's happening. I don't understand how any crypto is left anywhere, but MicroStrategy has purchased an additional 660 Bitcoin for $25 million in cash at an average price of $37,865. As of January 31st, 2022, they hodl 125,051 Bitcoin, acquired for $3.78 billion at an average price of $30,200 per Bitcoin. Next up, research shows Bitcoin network transaction volume surpasses American Express. In a new report, cryptocurrency investment firm NYDIG found the Bitcoin network surpassed 3 trillion in transactions last year. Bitcoin has jumped into the number 3 spot in this ranking through significant growth in transaction volumes, NYDIG researchers wrote in the recent report. If this isn't incredible adoption news, I don't know what is. Moving on. BTC whale accumulation continues despite risk-off environment. Despite asset prices falling in the current risk-off environment, the demand for BTC is not abating. In fact, a large number of BTC is still flowing off centralized exchanges, a clear sign that dip buyers are aplenty and continue to scoop up BTC whenever a good opportunity arises. I like to hear it. This is good. Everyone's buying. Institutions are buying. Whales are buying. Next up, the IRS will not tax unsold staked crypto as income. This is a good example of regulatory clarity. The more of this we can get, the more adoption we'll have. Let's move on. XRP sees second largest whale accumulation. According to data, crypto whales have been on an XRP accumulation spree since the beginning of this year, representing the second largest accumulation of the XRP token during the past 5 years. This may indicate that whales are being optimistic of a favorable outcome in the ongoing lawsuit between Ripple and the SEC. The discovery that XRP is trying to get on a previous ruling that they do not have a security token. Maybe the whales know something that we don't. We'll see. Hey everyone, hope you're enjoying the content so far. I'd like to take a quick minute to share a couple ways you can help the channel by using the affiliate links for some products that I use and recommend. First up is Ledger, popular for their Nano line of hardware wallets. Hardware wallets are a necessity for crypto protection. Next up is Trezor, popular for their Trezor 1 and Model T hardware wallets. They are analyzed, reviewed, endorsed by experts, easy to use, quick to set up. Manage your entire digital identity, coins, keys, or passwords, all on one device, owned and controlled by you. If you're in the market for a hardware wallet, use an affiliate link on screen or down in the comment section below. Remember, not your keys, not your coins. The week started out pretty slow for the cryptocurrency space, possibly due to the holidays in North America. But with all the markets open, things could start to turn around. Let's dive into some charts and take a look. Looking at the Bitcoin dominance chart on the weekly time frame. Bitcoin dominance continues its 5-year decline from highs in the 90% range to where it currently sits at 42.7%. After hitting an all-time low of 35% in 2018, Bitcoin dominance rallied to almost 74% in December of 2020. It's been all downhill from there. Since April of 2021, we seem to be making a series of lower highs and lower lows, forming an ascending triangle or a bearish pennant. You let me know in the comments what you think it is. Currently, dominance looks like it's rejecting off the top trend line of resistance. If this is a descending triangle, we could see a measured move down to 31%. If this is a bearish pennant, we could see it drop down to 25%, which would not be a good look as this would make a new all-time low for Bitcoin dominance. Let's take a look at Bitcoin. Bitcoin on the weekly time frame continues to consolidate in a 420-day trading range between the low $30,000 area and its November 2021 all-time high of $69,000 USD. As we sit in this 15-week downtrend, our last hope at a bullish outcome depends on price staying above the $33,000 area, keeping price action within this giant ascending triangle. A trader's dream would be if price stayed within the triangle range, bouncing around for the next year or so. If this triangle breaks to the upside, we could be seeing an incredible price target of almost $200,000 per Bitcoin, but that seems far away from the slow grind down we're currently on. If price action breaks down and we are to enter another prolonged bear market, we could be seeing some considerable downside. Drawing a Fibonacci extension from the candle body $12,000 range around the last breakout down to the candle body low of around $5,300, we can see some potential support levels at $29,000 at the 3.618 Fibonacci extension. Or if we go lower, we could test around $23,000 at the 2.618 Fibonacci extension. Could we also be forming a mangled head and shoulders with a potential downside target of around $20,000? Let's hope not. In all reality, it's unlikely we drop down below $30,000 as that seems to be where Michael Saylor and Elon Musk has accumulated most of their Bitcoin. But with mounting geopolitical tensions and economic uncertainty, eyes are on government actions in the next Fed meeting in March to see what happens next. That's it for this episode of Crypto Sandwich. Hope you got something out of it. Let me know in the comments below what you thought. Let me know if you'd like to see me cover anything I didn't. Until next time, I hope you have a great time. Keep your head up and keep your bread up. Disclaimer. The Crypto Sandwich channel is for entertainment and information purposes only. Nothing on this channel is financial advice, nor is it meant to be a recommendation to buy or sell any financial instrument. I'm not a financial advisor, I'm a sandwich. If you take financial advice from a ham sandwich, you're out of your bread box. Always do your own research.